Hey everyone, welcome back. Hope everyone's doing well and had a good trading day today. This video is a brief recap of how Nifty played today on 7th of May. We will discuss the intraday 5-minute chart and later discuss by what we expect from tomorrow. So an interesting day today, huge swings in both direction, up as well as down. Honestly, it was not an easy day to trade. It was not a day where you would just take your trade, take your buy or a sell signal, go to Walmart or maybe DMart, come back after a couple of hours and see yourself in a profit. It was a day where you had to be constantly on your toes. Take the trades, exit quickly, take quick profits, look for new patterns, figure out the next move of the market. The bars were big, the moves were quick, so you had to be constantly do a lot of work today. However, if you look at the bars today, and if you look at the bars we had yesterday as well as day before, on Monday and Tuesday, most of the bars were small. They had a lot of dojis, and which was a signal that the market was in a limit order market. However, today, if you see, there were a lot of big bars. Yes, we had pretty sharp reverses up and down. The market was in a trading range, but there were not a lot of small bars, not a lot of small dojis, tails and hesitation and confusion. So even the stop order traders would have been able to make money today, not just limit order market. Okay, so let's discuss what took place today. Let's understand the price action. Going into the day, if you refer my previous video, I had discussed that we are far away from the moving average and the market has been making a lot of trading range price action. The bulls will be willing to buy only for at a pullback, maybe somewhere around the daily EMA. So today, if there was a gap down and if there was a bear trend from open, I was expecting a huge bear trend day. Why am I saying that? We had a bear bar yesterday. If it did open gap down and if we had a good enough strong follow through selling on open today, we could have fallen all the way down somewhere to the trading range low, somewhere to the EMA before we found buyers. However, if you look at the first bar of the day, we did open gap down. However, instead of finding sellers, instead of the bears attempting a strong follow through selling on open, look at the first bar of the day, a huge bull bar. We we closed, we got back above the previous day low, huge bull bar. How big is this bull bar? About 165 to 75 points, 170 points big bull bar. It's a measurable surprise. Look at the size of the bars to the left. This bar is more than 3 times the size of all the bars to the left. The average size of all these bars would have been around 20 points, 30 points. This is more than three times of that. This makes me think that today either we are going to get a bull trend day or we will get a trading range day. So we have two possibilities now, either bull trend or a trading range day. However, look at all these bars to the left. What is more likely? Trading range day is more likely. So first bar of the day, we reversed back into the previous, above the previous day range. Yesterday, I had also marked this bear channel. On Monday and Tuesday, the market was within this bear channel. So I was expecting if the market did open flat somewhere in this area, we could have another sideways day. Instead, the market opened gap down and the first bar instantly reversed up inside this bear channel. So I'm more neutral right now than bullish or bearish. I would have been bearish had we continued to fall after the gap down on open. So first bar of the day, huge bull bar closing near its high. Yes, it is below EMA. However, this is strong enough to have at least a second leg up. Would you risk buying on the close of this bar and keeping a stop all the way down for about 150 points on first trade of your day? Would you risk that big? A majority traders should avoid this trade. They can take a trade only with a small quantity, maybe about 20% of a normal size. So reasonable buy on the close of first bar, above even above the high of bar one, but only a small quantity. Bar 2, a small doji, however, still second leg up is more likely. So more likely buys below bar 2 than sellers. Bar 3, huge bull bar, another bull breakout bar, and we are breaking out above this entire trading range price action here. This is the previous day high. The market broke above the previous day low. Is it possible that we might get a rally all the way to the previous day high? Yes, we can. However, the bulls need good follow throughs. Bulls need consecutive bull bars closing on their highs, which they did get here on bar 4. Yes, the bar 4 is not as big as bar 3, but still consecutive bull bars closing near its high. Possible bull trend from open, and we might get a rally all the way above the previous day high, making the daily chart up bar, an outside up bar on the daily time frame. However, you can buy on the close up bar 1 above the high of bar 1, on the close up bar 2 or above. You can buy on bar 4. However, you have to be very careful here. Why am I saying that? Look at all the price action before. Market is clearly in a trading range. If you go on a higher time frame chart, look at how the 1 hour time frame looks like. We are here, and the 1 hour time frame looks like this. All the bars to the left looks like this. 15-minute chart, all the bars to the left look like this. Yes, it's a reasonable buy the close bull trend. We have a 4 bar bull micro channel. We have consecutive bull bars closing on the highs. It is possible that we might rally all the way above the previous high before we find sellers. We have broken out above this trading range and we have consecutive bull bars closing near its high. You can buy the close. However, if there is any reversal, you have to exit quickly because market can quickly have a deep pullback considering all the bars to the left and the trading range price action that has been going on since past 10 days, and which is what happened on bar 5. Big outside down bar, big enough bear surprise. If this is a strong bull trend, why did we have a bar this big closing near its low? Why didn't we find buyers above bar 4 and instead we found sellers and had a big outside down bar? This makes me think that the market might possibly have has had a major bull surprise on open and will now enter a trading range. So if you did get long anywhere in the first 4 bars, you have to be quick to exit here. It is possible that the market might enter a trading range. But is it a reasonable short below bar 5? If you're long, this is enough for me to exit my longs. But is it enough for me to go short? No. We are in a 4 bar bull micro channel. I would wait for a second entry short, some kind of a lower high major trend reversal or a higher high major trend reversal. Sideways is more likely than down here. So more likely buyers somewhere around the 50% pullback of this area, somewhere around EMA, somewhere around the previous low. I would not sell below bar 5. Bar 6, bad follow through for the bears. More likely buyers below. However, look at bar 7. This is a bear surprise. The bulls, market is not doing what the bulls are expecting it to do. The bulls, after a major bull surprise, wanted a bull trend from open, break above the previous day high. However, this deep pullback just makes trading range day more likely rather than a strong bull trend day. We had a major bull surprise, so a strong bear trend day is unlikely, hardly 15 to 20% chance of that happening. However, this deep pullback, there is a 60% chance that we might have a trading range day or a weak bull channel rather than a strong bull trend day. You can sell the close for at least one more leg down. This is strong enough to get at least one more leg down. Bar 8, now we have consecutive bear bars closing near the lows. This bar did not close on its low. However, we have another bear bar closing on its low, bar 8. At least a second leg down is likely. It is possible that this entire rally on open turns out to be a bull trap and we go all the way to the low of bar 1. However, we need consecutive bear bars closing near the lows. We had one bear bar closing on its low. However, we had a bad follow through. We have another bear bar. However, this bar did not close on its low. There is a prominent tail at the bottom. Bar 8, this is a bar closing on its low. Now the bears need strong follow throughs. They have two big bear bars. However, they need consecutive bear bars closing on the lows. Look at the follow through here. Bar 9, we reverse back up. Yes, it's a 4 bar bear micro channel, so there are more likely sellers above. We might get one more leg down here. However, this is an indication, this strong reversal up is an indication that instead of a strong bear reversal all the way to below bar 1, we might find some trading range price action, some sideways momentum here, a possible double top lower high major trend reversal or a higher high major trend reversal before we have a strong move down. Bar 10, bear doji, bad follow through for the bears who are expecting a second leg down. Second leg down is likely, but I don't expect a big move down now. More likely buyers below bar 8. Bar 9, sorry, bar 11, big bear bar, another big bear bar closing on its low. However, bears need follow through here, or else this is a possible third push in a wedge bear flag, wedge bull flag. If you see this, well, the market is clearly ignoring the trend channel line of this bear channel. Let me draw this. It is possible the market is considering this as a trend channel line. We took support on Monday around bar 32, yesterday as well. And we are right near that support. Yes, we had one excess price here, bar 1 today. However, most of the trading range price action since the past 2 days has remained within this channel. So it is, and we are right around the bottom of this bear channel. Also, this is a possible wedge. The bears got a bear bar here, bad follow through. Got a bear bar with a tail below. Another bear bar closing on its low, but a bad follow through again. Another bear bar closing on its low, and a bad follow through again on bar 12. This makes me think that a trading range is more likely. I would not stay short here. Looks like the sellers are scalping out of their shorts here. I'm more looking to buy here. I will sell unless after we get consecutive bear bars, good strong follow throughs with bars closing on the lows here. There is another bear bar closing on its low, but more likely buyers below. Bar 14, strong outside up bar. This is what I was talking about. Bar 14 is a micro double bottom with bar 12. It is also a wedge bottom here and a strong outside up bull surprise. So we are right now in a trading range. This just confirms the strong move up, the deep pullback, and bad follow throughs for the bears makes trading range more likely. And now we have an outside up bull bar. However, look at the follow throughs. We had a bull bar, bad follow through. We had another consecutive bull bars, but then we got a deep pullback. The bears have failed to get good follow throughs. Do you think we will get a good follow through after bar 14? Bad follow through is more likely, which is what we got on bar 15. So the bulls who bought on an outside up above bar 13 are scalping out of their shorts, are scalping out of their longs here. However, after a wedge bottom, at least 2 legs up is likely. This is a strong enough sell signal bar. It is a possible lower high double top with bar 9. However, a second leg up is more likely. And trading ranges are all about 2 legs up and 2 legs down. Here, we had first leg up, first leg down, pullback, and a second leg down. Now we have a reversal up. So I'm expecting at least 2 legs up. Also, after wedge bottom, there are at least 2 legs up. So there are more likely buyers below bar 15 than sellers. Bar 16, the sell signal didn't even trigger, and now we have another bull bar closing near its high. The bulls who bought around this area, who bought above the bar 14 high, now is the time to scalp out of their longs. Do not expect a strong move up until you have consecutive bull bars, strong follow throughs. We are right near this resistance, the bar 9 high. The market might possibly make a double top here, and a bad follow through is more likely. We had a bull bar, bad follow through. We have another bull bar closing near its high. What is more likely? In a trading range, bad follow through is more likely in a trading range. Bar 17, bad follow through for the bulls. However, not a strong sell signal bar. Yes, it's a double top, lower high double top with bar 9. However, not strong enough sell signal here. Bar 18, now we have an II pattern here. We have an II pattern. Bar 19, bar 17, sorry, is within bar 16, and bar 18 is within bar 17. Also, it is a lower high double top with bar 9, a reasonable short below this. However, is this rally enough for a major trend reversal? We went up for about 4 bars, 14, 15, 16, and 17, and we are reversing down around bar 17. For a reasonable major trend reversal setup, we need a bull trend, a bear breakout of the bull trend line for about 10 bars, a pullback for about 10 bars for the test of the high, and then a reversal down. The pullback is not for 10 bars, it is just around 4 to 5 bars here. So, a minor reversal down is more likely. This is not a double top major trend reversal signal. Only a minor reversal is likely for a scalp short here. We haven't triggered the bar 18 sell signal. However, we broke above the bar 18. However, can you buy here? I would wait for a breakout above this double top before I look to buy. Breakout as well as follow through before I look to buy. There are more likely sellers somewhere in this area. Any breakout up or down is going to fail. And I'm only looking to short here after 2 legs up. We have a micro double top. Bar 19 was a micro double top with bar 16 high. We broke below this neckline here, below bar 18, and we have a big bear sell signal as well. You can sell below bar 18, or you can also sell below bar 20. However, trading ranges, like I discussed before, is all about 2 legs up and 2 legs down. And this is a possible second leg down. We have first leg here with bar 18, and now we have a second leg down. So if there is any reversal, you have to exit quickly, which is what we got. This is a bear body, but it is still a bull reversal bar. We are closing above the midpoint of this bar with a big tail at the bottom. It is a possible lower low double bottom with bar 15 low, and we are 2 legs down. After 2 legs down in our trading range, you should look to buy. Trading ranges are all about buying low and selling high, and right now we are low, so look to buy. It is a reasonable buy, but only for a scalp. Bad buy signal bar, so you cannot expect this to reverse into a strong bull trend. Only expect this for a scalp. Another bull breakout bar 22. However, bulls are more likely going to scalp out of the longs here. The ones who bought above bar 21 will scalp out somewhere here or around this swing high, because there are more likely sellers above, more likely bad follow through after bar 22. We have a bull bar here, bad follow through, bull bar here, bad follow through. What do you expect after this bull bar? Bad follow through is more likely, which is what we got on bar 23. However, is this reasonable to sell? After in a trading range, I'm always looking for second sell signals. 2 legs up and then a sell signal at least. This is just the first leg up, and the sell signal is too weak for me to take. So more likely buyers below for at least one more leg up. We didn't even go below bar 23, and we have another bull bar. However, we are right near this double top. This as well as this. I would wait for a breakout and a follow through before I look to buy here, because we are in a trading range. So more likely the breakouts up or down are going to fail. However, look at this. We got a breakout on bar 25 as well as a good follow through. We are in a 6 bar bull micro channel. The bulls are getting good follow throughs. It is reasonable to buy here. The market is possibly going for some kind of a measure move here. Reasonable buy the close bull trend. However, can you expect a breakout above day high and a strong bull trend all the way up to the previous day high? No. The bulls who are stuck somewhere here are disappointed by the pullback here. So there are always going to be sellers somewhere around the close of bar 4, somewhere around the high, somewhere higher. After a deep pullback, a bull channel or a trading range is more likely rather than a strong bull trend. So even if you do buy here, you have to be quick to exit if there is any reversal up. This is a double bottom and a breakout above the neckline of the double bottom. So we might get at least a measure move up somewhere around 421. The market continues to trade higher above 420. We will look for other kind of measure move, which might be all the way from bar 14 low till this breakout point all the way till 460. But at minimum, after the 6 bar bull micro channel and a bull breakout and follow through, we should get somewhere around 420, which we did around bar 20, bar 28. This is strong bull micro channel. We have 5 consecutive bull bars here. There is a there is a good chance that we might at least test the day high right now, the bar 5 high. However, like I said, you have to be careful. There are still bars to the left. Though this is a very strong rally, we are still below bars to the left. This is still a possible second leg bull trap, a big second leg bull trap in this trading range. This is the first leg up from bar 14 to bar 16, pull back, and now second leg up. And we are right around the measure move target. You can stay long. You can swing your longs here if you did buy on the breakout of bar 25 or bar 26. However, any reversal here, you might quickly have to exit because of the possibility of a second leg bull trap here. However, 8 bar bull micro channels are more likely bias below bar 28. And we did trigger the low of bar 28 and we found bias. Bar 30. Now this is a second attempt to go below. We went below bar 28, we reversed up with this sale, and now we have another bear bar, a small bar closing near its low, bar 30. Not a high probability sell here. However, you can sell only for a scalp, uh, betting that this is a possible second leg bull trap and a trading range after a bull surprise on open. So reasonable sell below bar 30 for a scalp here. The probability is not all that high because of the rally here. So you might not get a strong reversal down. This is not a lower high major trend reversal. The rally is strong enough for me to expect just a minor reversal down rather than a major reversal down. For a major reversal, the market should have not rallied this strongly up. If the rally was weak with a lot of pullbacks, and then if I had got this sell signal, that would have been a high probability major trend reversal. However, only minor reversal is likely here. So the bulls, like I said, if you see any reversal and if you are still long, this is a reversal. You have to be quick to exit. We are still below the day high, and this is a possible second leg bull trap and a possible trading range day. And look what we got here. Big bear surprise. At least a second leg down is likely. Bar 32. Now we have consecutive bear bars closing on that slow. However, you have to be careful here now. Though you have consecutive sell bear bars, market is clearly always in short and a second leg down is likely. However, it is also a possible triangle here. Get rid of the channel here and mark the triangle for you. You have two pushes here. The first push was a bar 1 low. 1, 2, 3, 4, and 5. 5 reverses, which makes trading triangle likely. However, this is still strong enough for me to expect a second leg down. You can sell here, but only for a scalp. And look how small the second leg here was. We went down, we pulled back, and this is the second leg down, a small second leg down. And since we are in a trading range, I'm looking to buy low and sell high, and this is low. And we did get a small second leg down here. I was expecting a bigger second leg down. However, this is also a reasonable buy for a possible double bottom with bar 23 low, a micro double bottom with bar 32 low, and a possible bear trap reversal up all the way to bar 31 high. A reasonable buy here. The bears want a second leg down after such a strong leg here. The bulls, after such a strong leg up, want a second leg up. So if you do get a second entry buy here, this is a reasonable buy, bar 34. This is a low and short, bar 36. Sorry, this is a low to short. We went below bar 33 and now we reversed up, and this is a low to short right near EMA. But this is a strong enough reversal up for me to expect at least one more leg up. So more likely bias below bar 36, which is what we got. Bar 38, this is the IY pattern and a sell signal. Reasonable to sell here, expecting that we might get a second leg down after such a strong move here from bar 29 till bar 32. The reasonable sell below bar 38. However, since it's a trading range, you have to use a wide stop loss. If you use a tight stop loss just above bar 38, high probability that it might get hit. So more likely sellers above this area, buyers somewhere below bar 32 after a second leg down. The sell signal didn't even trigger, and we have another bull bar closing on its high. However, what do you expect? We have a bull bar here, bad follow through. Another bull bar, bad follow through. What do you expect after this bull bar? Bar 39. Bad follow through is more likely. So more likely sellers above in this area than buyers. We got a good follow through, however, not strong enough. This is not a big bull breakout bar, and we are approaching somewhere near the top of this swing range, and also somewhere around this bear trend line. So if you did go long somewhere in this area, and you got around how many points here? Got about 30 points here. Good enough scalp. Reasonable to exit 50% of your quantity for a scalp and hold 50% for a swing as a possible triangle bottom and a bull breakout. However, look at the follow through here. Once you get a bad follow through after every bull bar, trading range is more likely rather than a triangle bull breakout and a measure move up. Reasonable sell below any of these bear bars here. We are somewhere high in this trading range, so you can sell either above bars, below bars. You can sell the bull closes as long as we do not have a strong bull breakout and a clear change in the character of the market. And as long as we are near the top of this trading range, it is reasonable to sell for any reason. Another bull bar, but more likely sellers above this area. I'm only looking to sell until we have a strong bull breakout and follow through. This is a we also got a parabolic wedge stop here. Bull bar bad for two, bull bar bad for two. Another two bull bars, and then we got a bad follow through. Instead of triggering the sell here, we got an attempt to break out above this wedge bear flag. However, the breakout failed, and we have a bear sell signal here. Weak sell signal, not strong enough. High probability to wait for a bear bar closing on its low before taking the sell, which we did get on bar 45. Reasonable to sell here for at least two legs down. The bears, after such a strong leg down, wanted a second leg down here. So it is possible we might fall below bar 32 before we find buyers. We did fall below bar 32. And since this is a trading range day, also, wait, there's also another way to look at this as a triangle. We had a triangle short sell signal here, however, only a doji, so only a minor reversal is more likely. I was expecting buy somewhere below bar 32. Minor reversal and trading range was more likely rather than a swing short and a strong bear trend, a strong bear breakout of this triangle and a measure move down. As I said, trading ranges are all about two legs down and two legs up. We have first leg down here, pull back and a second leg down. So after a second leg down, I'm only looking to buy. Trading ranges usually go below support and reverse back up. We went below support here, bar 32. This is a swing low, so we more likely are going to reverse up. This is a reasonable buy above bar 53. Trading ranges might have weak signal bars, but as long as it is somewhere near the bottom, as long as the context is good, it is a reasonable buy for a scalp. We have another bull reversal bar here, bar 55. You can buy here or above bar 54, above bar 55. You have a lot of dojis. So high probability to wait to buy above a bull bar closing near its high. It is possible the market might enter a limit order market for the rest of the day. Looking at the four dojis here, and it is also reasonable to buy here, expecting a two legs up and a scalp move. High probability to wait for a bull bar closing near its high, which we did get on bar 57. Reasonable to buy here for a scalp. The bears did not get a bear reversal until bar 60. We broke below this low before we found the buyers. And now we broke out above bar 44 high before we found sellers here. However, look at the rally here. Strong enough rally and a weak sell signal bar. Yes, we are near the trading range high. This is the sell zone. However, the rally is strong enough to have at least a second leg up. Only a minor reversal down is more likely. More likely buyers below bar 60. We do have two consecutive bear bars here. However, not a high probability sell below bar 61 or below bar 62. What do you think? Will you get a sell the close bear trend here towards the end of the day? Or do you think confusion and a second leg up is more likely before we find a reasonable sell signal? After a strong sell, this leg up, a second leg up is more likely. This is a second attempt to break out above the bar 44 high. And now we have a second sell signal below bar 65. So reasonable to sell below that. Possible two leg bull trap, second leg bull trap. These two strong bull bars are a possible bull trap and a reversal down is more likely. Can you sell here for a swing? We are around 2:35 p.m. This is just too late for me to take any swing trades today. Any reversal up or down is only going to be for a scalp. We are somewhere high in this trading range day, so any sell here will only be for a scalp. I haven't buy signal bar 66, but more likely sellers about. We reversed somewhere around EMA. However, the bars are getting small. There is confusion and a lot of overlap. We are around 3 p.m. And if around 3 p.m. the market is in a tight trading range of 4 or more bars, the market might just close somewhere in that tight trading range. Towards the end of the day, you want a strong buy the close bull trend or a sell the close bull trend. This is not strong enough for me to take any trades. If I did go short below bar 65, I would just scalp out of my shorts here. If the market does fall down here, I would let someone else make the money. I would just wait and watch and maybe trade tomorrow now. And look what happened. Because the market was confused, because the market was in a trading range, and also in a tight trading range of 4 or more bars around 3 p.m., we just closed somewhere in that area. So big swings, big moves up, sharp moves up, strong traps here, strong bull trap here, then a strong bear trap here, another strong bull trap here, again a bear trap, three strong bear bars that too reverse up, strong bull bars that too reverse down. And that is what happens. Good stop order, lot of stop order trades today. It was not as difficult as yesterday or day before that. It was easy as compared to the days before, considering the kind of moves you are getting, good swings. However, you had to be quick to take profits. Let me get rid of all the lines now. And let's discuss what we expect for tomorrow. Tomorrow can be an interesting day if the market does what I expect it to do. Let me explain. Let me explain it to you on a higher time frame, okay? Yes, if you look at all the bars to the left, we have been in a trading range for quite a few days now, almost 10 days. However, there is one interesting thing happening here. We are getting lower highs in this trading range. If we see at all these highs, we have been getting lower highs. And this is an indication of selling pressure. This is an indication of an early bear breakout below this trading range low and a possible measure move down. So if tomorrow, if we do open flat or if we do open gap down, and instead of breaking above this swing high, above 24,430, if we do continue making this bear channel, or if we do break out below any of this and get a strong bear trend or a strong follow through, we might break out below this trading range low. It might have a sell vacuum test of the daily EMA all the way somewhere around 23,950. However, if we do break above this swing high, then the bear channel is not continuing. The bears are not strong enough to keep lower highs. And that means that the trading range is more likely. So if we do open flat or a gap down and continue this lower highs, bear trend, a sell vacuum test of the daily EMA is likely. If we do open flat and break out above this swing high, and stop this bear channel from continuing, stop the lower highs, we might get another trading range day. But if we do open gap up, and I don't want a small gap up, I want to gap up above all of this trading range price action. I want to gap up above around the 24,500, this area, this all of this trading range price action, at least of the past 3 days. If we do open gap up, I don't think this high will be much of a resistance. We might get a strong bull trend day all the way somewhere around 24,850. So to keep it short, if we do open flat or a gap down and continue this lower highs, we might get a strong bear trend day. If we do get a big gap up above 24,500 area, we might get a huge bull trend day somewhere around 24,850. But if we do open flat and break out above this swing high and stop the lower highs, stop this bear channel, this will transition into a trading range, and tomorrow will possibly be another trading range day. So that's it. Best of luck for tomorrow. Hope you all have a good day tomorrow. Thanks everyone for watching.